Hey, it's been a while, so let's dive right into it. A lot of data to cover today. Federal Reserve near end of quantitative tightening process. Quantitative tightening actually is the first time ever I have seen that quantitative tightening has been happening and that the markets are continuously hitting all-time high. Gold is hitting all-time high. So it's actually going to be quite interesting looking at today's data, especially with Federal Reserve and what they're doing, what I think they will be doing in the next few months. I think the market will rally a lot once the quantitative ease starts happening and the quantitative tightening stops. But let's look at the data and let's see what that actually means. So as you can see, all-time high, gold's hitting 4,000. It's been crazy, a crazy few days since I'm gone. And as I expected, the government shutdown did not impact the market at all. It grew 3% as I anticipated in the last video I did a few days ago. But yeah, looking at the data, liquidity programs, the balance sheets has been reducing all year long. So we see that we topped up at almost $9 trillion and then we are falling down to 6.6. So the tightening has been happening since 2022. It's been ongoing for 3 years now. I think this is one of the longest tightening that we have seen. And usually when the tightening happens, the markets react negatively. This time they didn't react negatively, but there is a reason why they didn't react negatively and why that reason is going to go away soon. So it's very important to understand the data and why behind it. So if you look at the deposit terms deposit, so this is like bank reserve, so to call it. It has fallen under 3 trillion, and when it falls under 3 trillion, this is usually when market starts to be edgy and the banks don't have enough cash reserve to supply the money, and then the changes has to happen. Currently the gold rush, I think it's related to this directly because the market is anticipating the stop of quantitative tightening, and we are going to quantitative easing. And when the quantitative easing is happening, usually the markets go crazy bollocks, and basically everybody is just preparing for it, especially the big institutions and us as well, of course. But yeah, looking at this, it's fallen under 3 trillion. That's the first warning sign. The second warning sign we have is that the Federal Reserve repo has been falling down, of course. This is the reason why the market has not reacted to quantitative tightening as much as it should. The reserve of repo has been prepared and it was really healthy, but now the reserve is almost on zero. We have about $100 billion left. When this goes to zero, usually the effects of tightening starts to show in the market. Once it goes to zero, we will see some impacts on the market. I think we will see a sharp decline in gold, sharp decline in S&P 500, and then we will see the transition from tightening to easing, and then markets picking back up, and then another crazy rally for another year and a half potentially. What I would love to see, of course, if this is something that will happen, I don't know, nobody knows, but this is something I would love to see. If you look at the effective rates right now, they are 4 to 4.25%. And looking at security overnight financial rate data, it's been sitting steady at a healthy pace of 4.15. I would love to see this going down below 4. If we see it at 3.95, that's a first sign. And then if we can see this balance sheet slowly picking up, that means the Fed is entering the market again. And yep, and this starts to spike up again and so on. So it's just a lot of guessing, a lot of history data that combines into something that could be an outlook in the future. Is just going over the data and thinking what will happen. If it will actually happen, we don't know, but this is my guess. My guess is that we could potentially see let's say for another 3-4 months growth, 5, 7 to 10% on average. I think from November until April we see S&P 500 growing. This is like a rally months ahead. Then I could see a sudden correction of maybe 20 to 30%, and then another spike up to $860 to $980 rate. So that would be a nice 75% over the course of 2 years. This is something I would love to see. If this will happen, I don't know, nobody knows, but this is something that I would love to see. I have enough cash reserve to buy in on the fallouts, and I will ride the wave up if this is to happen. New Zealand delivers a joy to frail economy with 50 BP rate cut. So this is actually interesting way New Zealand actually dropped the 0.50. Will the US do this now as well? I don't know. Nobody knows, but it's interesting to see that the world is cutting the rates. I hope the US will do as well. Looking at unusual options, I see Hertz. Global Holdings, they have a lot of call ratio opened today, almost nearly double than the short ratio at 0.56, so it's bullish. The stock is actually in quite 20 on the 0.06. I actually want to have a look at this. Hertz is HTZ. I actually want to have a look at this revenue falling down. Let's see, gross margins, operating profit margins not really healthy. Ratio was the market at 1 billion. This is not something that is interesting for me. It's a small market cap. In general, I would look more into this, but I'm not interested in this company. But it's interesting to see that there is some there's some bullish segment. So if you are holding this company, it could be a first positive sign for you, but again, it's just a speculation. Microsoft actually has a lot of call ratios, 0.48, very bullish, nearing an all-time high. Maybe surprise news on quantum computer, no one knows. Let's see what happens, but it's a good positive sign. I hold Microsoft myself, so of course all the positive side and all the upside, I'm very happy about it. Looking at insider activity, BGC, I see a lot of buying, and actually I see that Nvidia is continuing their sale. They started selling again. Again, if you're a holder of Nvidia, I would look more into details for this. Maybe it's just an investment. I don't know. I don't hold Nvidia. I took a nice profit out, and I'm out of the company at the moment. But yeah, if you're in, just look into this. The second thing I see is BGC Group. It's purchasing quite a lot of shares. It's a surprising amount of shares compared to the company value. It's a small market cap, so I'm not really much interested into it myself. But it looks okay. It doesn't look bad. The revenue is growing. They have some dividend growth as well. Operating profit margin is on plus. It's not as much as I would love to see it, but it's on plus side. And they have good return on equity. I mean, okay return on equity for a small cap and return on asset. So yeah, balance sheet, total assets at 4 billion, total liabilities at 3, which is okay as well. It's not good, but it's okay. So for small car forecast, let's see what they say. Everybody's saying up, 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 up. So maybe if you want to risk something, this is not a company I usually invest in, but maybe if you want to risk a potential of $14, I could retain a 60% return, which is okay. FIRE index 52, sitting stable since I left. VIX had a little bit of spike up at 17 yesterday, and some spikes are happening. So from 15 it went to 16, it went to 17, which is still healthy. As long as we don't see spikes on 20, I think we are fine. But I think if this is to happen, if once the repo reserve has run dry, and then there will be some disruption in the market, we could see VIX jumping to 20, 21, 25, maybe 30 even, and if the market turns sharply, we could see reduction. As you can see, futures are actually running in positive before the market opens, which is always good to see, so more money to be made today. Puts and call ratio, it's the highest I've seen it in a while, 0.91. So it's just one signal. Again, it doesn't mean much. It's just bears and bulls are evening it out. Sentiment, we had a new sentiment update since I did the last video. Still more on bullish side than on bearish, which is good. It's just always good to see. Let's see how that, if the market starts flipping, let's see how fast these numbers change. Some of the upgrades and downgrades, I'm not interested in any of them. You can pause here for upgrades, and you can pause now for downgrades if you're interested into this. Earning calendar, this week I didn't see anything that interests me, but here is today, and here was yesterday, market cap, maybe MKC if someone is interested into this. Economics data, we have PYMNTS today. It's going to be interesting to see like a brief overview, but of course 3 weeks afterwards is when we will see the real data. So today we have PYMNTS. Beside that, on Friday, Michigan Consumer Sentiment Prel. I don't have any expectations. I don't know what's going to happen. The government is still shut down, so the information we will be getting, is it reliable or not? I don't know. But that's it what I wanted to cover. It's good to be back. We will continue with daily videos. As always, God bless and take care.